What's up, folks? Herman Williams with ATM Financial Services. Have you been paying any attention to any of the news related to the stock market lately? Maybe you heard something about an investor platform called Robinhood and how they and other retail investors caused quite a stir in the stock market recently. Well, whether you are already an investor or have been considering starting investing, I gotta tell you, these are some exciting times from my perspective. I think we're entering a new era for the individual investor. Recent events have proven what I've been saying for years, and that is that almost anyone can make a lot of money in the stock market, not just the big boys. This channel is dedicated to educating average, hard-working individuals who want to live a better, more financially secure life, but may not understand all the terminology they hear or know the behaviors they need to exhibit in order to reach their goals. If you're new to this channel, please take a moment to subscribe and don't forget to smash the bell so that you will be notified when new videos are published. Also, please like or dislike each video and leave your comments, good or bad. It helps me to provide content that is useful and informative. So this is part 2 in a series of videos I'm doing to help you better understand the basics of how the stock market works, some of the terminology that you hear tossed around, and how you can apply this knowledge to pave your way to financial freedom even if you don't have a lot of money. In part 1, I cover what happened with the whole Robinhood thing and who benefited and who got hurt. So if you haven't heard about any of that or you're still not sure how any of that affects you, be sure to watch that video. Today I want to get into some of the structural aspects of the stock market and discuss a few of the important terms that you need to understand in order to become a savvy investor. Now please understand that becoming a smart investor is a continuum. You start with a proper foundation, but you're always building on what you've already learned. I believe even Warren Buffett will tell you that he continues to learn new things all the time. So first of all, what is the stock market? Well, we can start with the New York Stock Exchange, which dates back to 1792. It is the largest stock exchange in the world based on total market capitalization of its listed securities, meaning that the total value of all the securities traded on the New York Stock Exchange is greater than any other exchange in the entire world. Many of the oldest publicly traded U.S. companies are listed on the Big Board, which is a nickname for the New York Stock Exchange. It is of course located on Wall Street and is made up of 21 rooms that are used to facilitate trading. Now currently the New York Stock Exchange is open for trading Monday through Friday from 9:30 a.m. to 4 p.m. Eastern Time. The stock exchange is closed on all federal holidays, and you should also know that when a federal holiday falls on a Saturday, the stock exchange is sometimes closed the preceding Friday. When a federal holiday falls on a Sunday, the stock exchange may be closed the following Monday. That may seem like a small detail, but as you become more actively involved in your investing and you're planning to make trades on certain days, that can be important. There are certain tendencies that the stock market has historically followed, and some are tied to certain days of the week. So knowing when the market is going to be closed on a weekday can sometimes be very important. The stock market is also broken down into many indexes. Just think of an index as a group of securities that have something in common. Stock market indexes around the world can be powerful indicators for global and country-specific economies. In the United States, the S&P 500, Dow Jones Industrial Average, and NASDAQ are the 3 most broadly followed indexes by both the media and investors. Just know that there are many others both in the US and abroad, but today I'm just going to touch on these big 3. Let's start with the S&P 500. The Standard & Poor's 500 Index is an index of 500 of the largest publicly traded companies in the U.S. The index is widely regarded as the best gauge of large cap U.S. equities. I know a lot of investors who have invested solely in the S&P 500, and most of them have done very well. Now that doesn't mean that you have to buy stock in all 500 companies to get similar performance to the S&P as a whole. There are a number of funds that are designed to mimic the performance of the S&P without having to buy individual shares of each company. Many of these funds are low cost and easy to access, and considering a historical performance of 10% return since its inception in 1926 through 2019, the S&P should definitely be part of your portfolio mix. Next is the Dow Jones Industrial Average, also known as the Dow 30. This is an index that tracks 30 large publicly owned blue chip companies trading on the New York Stock Exchange and the NASDAQ. Well, what are blue chip companies, you might ask? Well, a blue chip stock is a huge company with an excellent reputation. These are typically large, well-established, financially sound companies that have operated for many years and that have dependable earnings and often pay dividends to their investors. A blue chip company or stock is generally the market leader or among the top 3 companies in its sector, and is more often than not a household name. Some examples of blue chip companies are IBM Corporation, Coca-Cola, and Boeing. Since these blue chip giants are in a lot of ways considered the bedrock of our economy, this index gets a lot of attention. When you hear that the Dow was up 300 points or down 200 points, it's a measure of the cumulative change in value for the companies in that index. If you're looking for lower risk companies that may also pay a dividend, this is where you're likely to find the best choices. The last index that I want to talk about today is the NASDAQ. The NASDAQ is an index comprised of more than 3,000 stocks listed on the NASDAQ exchange. This exchange is where the world's foremost technology and biotech giants live. Companies such as Apple, Google, Microsoft, Oracle, Amazon, Intel, and others. If your investment interest tends to lean towards technology, you're likely to have the best luck researching stocks listed on the NASDAQ. The trick is finding the next Apple, Google, or Amazon. Obviously, a mixture of stocks from all 3 major indexes and some others that I didn't mention will give you more diversification and reduce risk and can increase your return. Wherever your investment interest might lie, you must do your due diligence before making investment choices. In the next lesson, I'll be talking about some of the things you need to look at and understand in order to begin analyzing stocks. In the meantime, if you don't already have an investment account, I want you to commit to starting one. All it takes is $50 to open an account with Fidelity. There are other trading platforms that you can use, and I am not in any way affiliated with Fidelity. I'm just very familiar with their product and services. If you choose to go the Robinhood route, just know that even though you can start an account with any amount of money, meaning no minimum, you won't have access to a lot of the research tools you get with firms like Fidelity. I don't want you to start trading right away. Just consider it a savings account for now. Keep adding money to it as you can, and as you gain more knowledge, you can begin making investments. Choose whatever platform works best for you. The important thing is to get started somewhere. Like I said at the beginning, we're entering a new era for wealth building that opens the doors for everyone to have an opportunity to succeed financially. But you can't be a part of the movement if you keep procrastinating and continue to do the same thing you've always done. The time has come for you to make a plan to change your financial behaviors and get in the game. And like I always say, change your behaviors and you can change your life. Be sure you are subscribed and stay tuned for the next lesson where we will get into things like earnings per share, PE ratio, what trading volume changes may indicate, as well as moving averages, and how you can use all this information to make money. Stay safe, protect yourself and your loved ones, and until next time, behave well.